Good morning, traders. Today is Tuesday, November 30th. My name is Charles, and this is the Pirate Traders live stream. All right, well, I'll just cut right to the chase and tell you all what you came here to hear. I'm a little bearish on the day. Essentially, what was going on yesterday with the market was that we pushed higher, created a double distribution, and then we started to build up volume and spend time up here at the very base of the previous balancing area. And all day long, I saw that as very bullish because it was a sign, the single prints that we had left behind, the double distribution, was a sign of a change in the market, and we're beginning to spend time back in the balancing area. But then in literally the last 30 seconds of the day, the market sold off and backfilled those single prints, creating a single distribution for the day, taking a big bite out of that bullishness in terms of that narrative. And then, of course, when I look at the way the overnight played out, it's very clear, instead of building support inside that balancing area was actually acting as resistance yesterday. So that makes me feel like this was just a dead cat bounce, and the market needs a larger pullback to bring in the support to break back up into that balancing area. Okay, so to me, that is very bearish to see. So what I'm going to be looking for here today, the overnight inventory is net short. So we do have a higher probability that we'll get a counter auction to the upside as the market opens. And where it finds resistance will be very telling, right? If we can't really get back up into this node from yesterday that starts at around, let's say, 46.35, anything short of that would be pretty bearish. Getting up into there and finding resistance would be good for a short back down. But pretty much getting below yesterday's low gets pretty bearish to me. So the last support that I would see if we did get below that low, sorry, let me get my drawing tool up and running here. So the last support that I would see is right down here. Okay. This area here where we got the node of volume from overnight and we got the node of volume from 2 days ago in the market, that area there. So pretty much call the low like 46.07. That area there is sort of the final deal or no deal. If we break below that, we're looking for much further downside continuation, probably that 50 daily moving average. So if we do sell off, to me, this would be a good short to get down into there, see if we find support. If we do, I'd be happy to look for the market to turn around and head back up. But otherwise, getting below yesterday's low feels really bearish to me on a larger time frame. The market is open. Looks like my software might be frozen. Well, that's weird. The NQ is not looking quite as bad. We didn't refill those distributions, so the NQ did end with a triple distribution on the upside, had the same overnight activity. So I would pretty much look at it the same way. If we start to get below this area here, call that 16,294. I would look for further downside continuation from there. But it is possible they find support in there and turn around and head back up. I don't know what the heck is happening with my ES chart. It's just not working. That one's frozen as well. That's so weird. Must be a data problem. Very weird. All right, well, I guess we're focusing on the NQ today for the market profile. It's going to be an NQ day, not an ES day. Sorry. No idea why that's happening. Okay, well, the ES is selling off like crazy here. Cotton Dog, I could always watch Puck Pack stream. Yeah, that's true. It's not very helpful for you guys, though, for me to watch Puck Pack stream. I mean, I can just watch it on the regular candlesticks. I just lose so much insight. That is so funky. I don't understand why just the one chart won't move. I'm going to try completely restarting the software. Bear with me for a few minutes, guys. I'm sorry about this. All right, we're back. We're up and running. Good old restart made it work. Okay, so getting below yesterday's low is bearish to me. We're now looking for resistance around yesterday's low. They continue to get resistance there. That is a sign they need a further pullback. And like I said, the next support will be in this node of volume down here. All right, so both markets aren't really giving us a clear signal yet. They're just doing that morning chop thing where they're trying to figure out where they want to go. Looks like the NQ found support right at the base of those single prints from yesterday, where you would expect it to. So once again on the NQ, getting below this node here from the overnight would be bearish for further downside continuation. And getting above this node from yesterday would be very bullish for continuation to the upside. But it's kind of a no man's land bouncing in between at the moment. Screwball, no NQ day. No, I'll still keep looking at the NQ. I'll keep you posted. J Trader, yesterday's low. What about Friday's low? Yeah, I mean, getting below Friday's low would be extremely bearish. That would be very bad. But I don't even think you have to get that far down to recognize that the market's going to have a larger sell-off. I think, like I said earlier this morning, I think this area is pretty safe bet. If we get below here, 46.06, we're probably heading down towards that 50 daily moving average, which is currently sitting at, oh man, as I turn on the daily averages, look at this. Just beautiful. So not only did we get the resistance yesterday trying to get back up into this balancing area, but we also got it perfectly on that 20 moving average on the daily. So rejecting off of that again increases the odds we head down to the 50. And so that 50 moving average, we're going to meet it with price at about 45.3950, which is also where we have previous support resistance, vertical support resistance from back over here. And I'm pretty sure that was a fib as well, if I remember correctly. Yeah, it's pretty close to the 50 fib for this bigger move we had here. So there's a lot of confluence right in there, right around that 45.39 level, if the market does trade down to there. But the first thing to get through is that node from the overnight here. Get down below that 06 level. All right, so I'm officially feeling bearish here as the market finds resistance at yesterday's low. To get me bullish, they got to get back above, or to get me neutral once again, they got to get back above 46.26. NQ does look different, though. It does look a little stronger this morning. Yeah, finding support at the base of the single prints. So I would say at the moment, tech is holding up the market. Smash that like if you're excited that the data's working now. That was scary. Lockdown rotation in play. Yeah, people are going defensive. The only sectors of the S&P yesterday that were really up were all the defensive stocks, which includes tech. So people are scared of this new variant. I'm not exactly sure why, but they are. All right, so once again, guys, I remain bearish as long as we continue to have resistance around yesterday's low. So getting above, say, the 26 level right here would get me back to a neutral stance. But as long as we stay below it, I think the market needs to pull back more to bring in more buyers. And at the very least, it's this node down here, if not much further. To me, it seems quite reasonable that we might need to head down to that 50 daily I was just discussing. And if we're going down there, we'd start that journey today. Good morning, Rad. Good to see you. S&P Addict, welcome. David Glass is here. Good morning to you. Steven, good morning. Scooball, hello. Nicholas, good morning. Philip, good to see you. JG with the GM, welcome. Two Manifs, good morning to you. Alexander, my friend from Belarus, welcome to you. Cotton Dog, good to see you. 4607 is the overnight TPOC. That is correct. All the way down there. That is where the overnight spent the most time. Ray Miller, good morning to you. Phoenix, howdy. Brett, I'm sorry to let you down with the NQ. I'll still keep an eye on it. Looking good right now. Like I said, if they can get above this node from yesterday, that would be very bullish for continuation higher. Kajax Both of those represent the S&P 500, right? I don't know what you're referring to, but no, there's two charts I look at. If you look up in the top left corner of the screen, you can see where it says ESZ21. So that's when that's white, it means we're looking at the S&P 500, and when it's NQZ21, that's when we're looking at the Nasdaq. Jose, good morning to you. Danielle, good morning. Arthur, good morning. David, good to see you. Welcome. Amir, good morning to you. Overlord, you're back with us. Good to see you. All right. Well, I got to go back to neutral here. They're getting back above that zero line with the ticks. So I still do feel like it's the NQ holding up the ES. And so if the NQ breaks, we get a larger sell-off. But I'm not looking to short it anymore. I'm looking to wait for more information. Vincent, good morning to you. Kajax, yeah, I mean, I'm not really the person to explain the difference between the S&P and the NASDAQ. I just recommend a quick Google for that. But yeah, I mean, the NASDAQ is more tech related, and it's only 100 stocks, or around 100 stocks, and the S&P is around 500 stocks, and it's more broadly representative of the market as a whole. So it's a little more like diversified. But I would just say, not to be rude, if you're that new to trading, probably this is not the right room for you. This is for people who are professional day traders of futures. And I don't say that to be mean, but just because you'll be so confused by everything I talk about if you're not on the same page. Screwball, I had a long trade on the NQ, and the ES scared me, so I only got a little scalp. That's fair, but remember the NQ is its own market. I find people get very frustrated when they try to trade the NQ off the ES. Some days they do move together, but some days they move completely opposite. So best to just watch the market you're taking trades in. Speaking of which, it's looking good. Need to pull back down and bring in some more volume here. But looks like they're trying to get some continuation higher. Both markets, in fact. Raw professionals, ruh-roh. Well, or trying to be professionals. I just mean people who are well researched. Uh, there's a link if anybody wants to watch Papa Powell speak here in a little bit. Cotton Dog, excellent observation. Tempo just kicked in very quickly there. Maybe people trying to front run the Fed speaking, the Fed chair. So I would just say, for what it's worth, if you guys are looking for my opinion, there's no reason to jump into a trade right here. Give the market a second to figure itself out. This is kind of random behavior. The NQ looks very strong, so if you're in a longs, definitely stay in that. But the ES just feels very uncertain and very random. So B period is still inside A. Value is lower. Very fast tempo. So it's a lot of short-term traders scalping their way in and out of trades very quickly and getting whipsawed. I would wait until there was more confidence in a particular trade. I'd be happy to get into the exact same setup before, going short below the yesterday's low if we pass back down below that, with a stop back up here around 26. Or if we get above this node from yesterday that I was talking about earlier, if we start to get above, say, 39 and then come back down and find some support, I'd be willing to go long with that. But in the middle here, just feels very uncertain. Okay, so we created a poor high in the B period. It's normal to get a push away from a poor high, but then the market generally comes back and repairs it, getting 2 ticks above that A period high. So we just keep that in mind moving forward. $50 likes, 125 viewers. Yeah, we could smash that like. We get them likes up. Get it above 75 in the next half an hour, and I'll stay for the rest of the day. I haven't really offered any great insights yet, but I'm sure something will come along. All right, there's the repair of the poor high. Ooh, they're excited. They're front running Powell. If there's real buying, though, they'll be able to keep these ticks above the zero line. Douglas, right at 75. There's that people are willing to just do the bare minimum to get me to stay. That's the message. But fair enough. I said 75, and here we are. So we'll hang out the rest of the day together. For those of you that are newer to the channel, if you've got questions, if I'm talking about stuff that you don't understand, just hit me with the questions. Arthur, time to go long? Nope, not here. I said wait till we get above this node, which we're just starting to poke above now, and then pull back down and find support. Right? Wait for that support to buy. Don't buy the FOMO on the push up. Wait till it pulls back down, and you see those ticks are able to stay above the zero line. There's plenty of money to be made all the way up to here. Wait for that better entry. NQ looking gorgeous. There you go. So the NQ pushed above this node, pulled back down, brought in some support. So this looks very bullish to me. They also have value overlapping to higher, which is bullish, neutral to bullish. So the NQ looks great. I believe you could buy the dips and sell the rips. Might be a little resistance right up here at 16,455 because that was the base of the spike down. But once you get through that, not much resistance. Yeah, until you get up to like 16,603. Or maybe 16,550 next resistance. Back to the ES. Okay, we got some levels with super low volume here, only 71 contracts and only 59. those are very likely to need to backfill. So there's no reason to FOMO into a long just yet. Let them pull back and start backfilling that and then see what's happening with the ticks. Nunez, so let's say we pull back down and find support. Where do you know you're wrong and exit the trade? That is a great question. I would say half back is a good level to put your stop below at this point. I know that's quite a bit of risk to take to enter in here with a stop that far away. So you may not be able to if it's too much risk. But yeah, I would say half back's a good spot. A couple ticks below that. 46.28. RK, the buy was under 20. Well, it depends, man. It depends how you look at markets. It's never too late to buy. You know, it just depends what time frame. Are you trying to trade, you know, very quick scalpy type of stuff? Are you trying to hold it all day? What's your time frame? Nothing wrong with waiting for confirmation. Okay, so remember these levels here with the 59 and 71, these need to backfill. So once we start to do that, which we're doing right now, we'll see what's happening with the ticks. Are they back below the zero line? See, they are. So I don't want to buy it just yet. I want to see them get above that zero line and stay above it. So now that they've backfilled those levels, does the support start to step in? Do we start to push higher again? Meet M. Hey, bro, new here. Don't understand anything. Where can I start from scratch? Yeah, well, I'll give you a quick run through of essentially what you're looking at. But yeah, I would recommend if you look in the chat, there's a book. It says like recommendation for book on market profile. That's a book called Markets in Profile by Jim Dalton. That's a great place to start. But I'll give you the quick, super fast tutorial. Okay. So essentially what this software that you're looking at here is, it's called market profile software. So what it does is it takes the same information as the candlesticks, but it just shows it to you in a three-dimensional format. So what it allows you to see is it allows you to see both how much time the market spent at a certain level and how much volume traded at that particular level. And so we just think it's more important to understand where the volume trades vertically in terms of what price level, as opposed to the way regular candlesticks just show you how much volume traded within a certain period of time. So the way you want to look at it, it's tough when you're looking at, just the A and B period here. So let's take a look at like this overnight range right here. So when you see the the profiles that have the like red and pink, those are the regular trading hours. And then the ones with the light blue and the dark blue, those are the overnight. And we just split those two up because they trade kind of differently from one another. Speaking of which, got a little glitch here. Let me fix that real quick. So if you look over here at this overnight profile, you can see how this is what we call a collapsed profile, where we take all the letters and we smush them on top of each other. And that allows us to see where the market spent the most time, right? We can see it spent a lot of time in this area, not a lot of time up here, not a lot of time down here. So that means the market was more comfortable doing business in this area where it spent more time. And then over here on the left, where we have the volume, we can see by the darker blue where the market put in the most volume, and then where it put in less, and then obviously even much less in the white. So the darkest blue, that represents the largest 30% of volume. The lighter blue represents the middle 40%, and the white represents the lowest 30. It's the same on the regular trading hours. Red, dark red, is the largest 30%. Pink is the middle 40, and white is the bottom 30. So that's what a collapsed profile looks like. And the shape of the profile lets us understand where the market put in the most time. But then what we can also do is we can expand it out. Expand the profile. And so then we can watch each one of these letters represents a 30-minute time period. So it's the same as a 30-minute candlestick. So each one of these lets us see how the market moved throughout the day. Watching it like that, right? Expand it out. So if we look at today's session, which is this one over here, this is today's session. I've got this volume profile here on the left. That is the volume for the entire day. And then the volume profile that's in the middle is just the current 30-minute time period. And the TPOs on the left are the collapsed profile, so the one that lets you see the shape, and the TPOs on the right are the expanded out profile, so we can see how the market trades throughout the day. The blue box that you see here, again, it's a little harder to see because we just started the day, but you can see it very clearly later on in the day. That is called the value area. That is essentially where 70% of the day's trade took place. And that's an important signal because it's much harder to move that around than just to move price by itself. And the big orange stuff that you see over here on the left, that is the cumulative volume profile. So that's over the last 30 days, where was all the volume traded within the market. And we use that as potential support and resistance. So for example, just looking at yesterday's profile, where did we find support? Right in this large cumulative node of volume there. Where did we find resistance? Right in the large cumulative volume profile up there, right? So that's what the market does. It kind of bounces between the larger nodes of volume. All right, well, this has me bullish here. They're finding support. Trying to anyway, and getting back above that zero line. This screen here, for those of you that are new to the channel, this is what's called the market internals. So it's the breadth, the advancers versus decliners, and then the ticks for the NASDAQ, sorry, for the NYSE and the NASDAQ. And these just basically kind of, this is like looking under the hood of the market. It kind of gives you some insight over what's happening. The main one to watch is the NYSE ticks right here, the bottom left corner. That's what I'm mostly paying attention to. And then on the screen over here, I have the SPX and the NDX because they only include regular trading hours. And I like to use this 20 moving average on the 15-minute candles as support resistance. The tricky thing about it is it has to be just the regular trading hours. So you can use the futures, but you just want to only use regular trading hours. Don't use the overnight. And there's obviously algorithms that trade at this moving average, so it's very, very commonly support and resistance. RK, waiting for pullback is a waste of time. Jump in. If wrong, stop. Stop out. See, I disagree with that. And to each their own. If that works for you, keep doing it. But I think it's more important to protect your capital. I'd rather miss a trade than enter a trade and have to take a loss. I'd rather miss a winner than enter and have to have a loser. Still can't get them ticks above the zero line. Come on, guys. So potential support for the NQ is going to be right at that 20 moving average now. Now that we push through to the upside, it could act as support. For the ES, the halfback, this little white line right here, which is 50% of the day's range, could act as support. RK, but that was a 20 to 30 point move. Yeah, and like I said, if you jumped in it and you made money, great. I'm just saying for me, as an overall thesis, when you enter, you don't know it's going to be a 30-point move, right? You're just guessing that you're going to be right. That's why I just like to be certain I'm going to be right before I enter. And if I miss 30 points, who cares? There'll be another trade along shortly. All right, so potential support here at the halfback. I've been too busy talking to listen to the Fed chair speak. Maybe he said something naughty, said something the market didn't like. NQ finding no support at that 20 moving average. That is bearish. Man, things are really turning. Turning quick this morning. Oh man, they found it exactly. Look at that resistance exactly at the base of that spike down. So the first resistance they hit caused this massive sell-off. That's not bullish. Not even a little bit. CCT. Morning, pirate traders. May I know what POC, weak high, and poor high mean? You absolutely may. My favorite questions to answer. So the POC is the point of control. It's currently right here. You can see these little green letters in the A and B. So it's at 26.2850, or actually 26.2875. That is the point of control. And the point of control is just wherever the market has spent the most time today. You can also measure it based on volume, but I choose to measure it based on time. And it becomes a really good signal on rotational days when the market is just going up and down. It will often come back to that point of control. And on trend days, when the market is moving a certain direction, so there's two types of scenarios the market can be in: trending one way or the other, or rotating up and down. So on a trend day, you can use the POC as an additional signal just to see, does it continue to get pulled higher throughout the trend? And on a rotational day, the POC will often be right around the middle, and the market will just keep passing through it. A weak high and a poor high. So a weak high is any time the market, one of the TPOs, so one of these letters, stops within a single tick of another letter, another TPO. That makes it weak. And that really it's not that big of a deal. It's just the more and more weak references that the market builds, the more likely it needs to come back and repair at least the first of those weak references. It's also a signal that the people who went long or short at that particular area were short-term traders. Right? We call them weak hands traders because they can't hold their position all day, or they can't hold it overnight. They have to take profits at some point that day. So they're very short-term traders. So if they, for example, let's just say we printed the C period in 3 minutes, right? It pulls down, it stops one tick from B and turns around and starts going higher. We just know that the people who bought down there have to take profits eventually. So it increases the odds the market will come back down. And a poor reference is the same thing as a weak, but just at the higher low of the day. And the way a poor reference acts differently is the market often pushes away from the poor reference. So let's say the C period came, we got up to here, we stopped one tick from the high. We would very likely get a push away first, the opposite direction, before the market turned around to go repair it. It's a little complicated when you're explaining it when there's nothing happening. But as these references pop up throughout the day, I'll mention them and explain. All right, I'm going to try to watch some of this Fed chair in 2X real quick. So I'll go quiet for a minute here. But again, doesn't feel like the market has made up its mind just yet. Okay, so you can see we just pulled that point of control a little higher here in the C period. So the POC was down here in the A period, up here in the B, and it's now up here in the C. So that is the first potential signal that maybe the market wants to trend higher, meaning it wants to do this. It wants to continue to go higher today. Doesn't mean it will, just one signal. The way we use market profile is by doing something called chunking, We look at a bunch of different things all together, and then, looking at a million different little signals give us an idea of a bigger picture of what's happening. So we don't have the ticks for a trend day. Oh, well, maybe. So for it to be a trend day, we need to see the ticks trending higher, which they are right now, and staying above the 0 line. The next bit of chunking is one time framing. We need to see the C period get above the B. Also, the fact that we're pulling value higher is a little bit bullish. Right? We started with value lower, and now it's overlapping to lower, so we're slowly pulling it up. If the market were to continue to trend the rest of the day, we could pull it all the way up inside yesterday's value. Oh, how the tables have turned twice this morning now. Nunez, do I take trades that target a push away from a weak reference? Not a weak reference. Like I said, sometimes I'll take a short on a poor high or a long on a poor low, but it can't be just the poor reference. There has to be like some confluence there, right? There has to be something else that I'm seeing. So for example, on the NQ, because we found resistance right at the spike down, which we expected to be resistance, if now as we push higher into it, the market gets up here and it stops a tick below at the same level or a tick above, I might jump into a short to push away from that because there's multiple reasons. I wouldn't do it just because of a poor high. And a weak reference by itself never changes anything in my mind. It's just something to pay attention to, really, for if more and more of them stack up. Trading Donkey, take notes so you can summarize. Thanks. No, I'm going to get all those same questions again. This is what happens when we're live, baby. Live on the YouTube. I guarantee you there'll be at least 4 more people today that ask what a weak reference is. But that's what we're here for. All right, so there's a poor high right there. Normally we get immediately repaired. So there you go. They didn't make it easy this morning, but the market is one time framing higher. We have a trend. So what we look for now that we got the signal from the market that the market is one time framing higher, we got the ticks trending higher and above the zero line. So what we want to see now is we want to see the C period low stay above the B period low. So if the market pulls back down to here, it can pull back all the way down to here. It can actually get one tick below. 2 ticks is a break. And then as long as it finds support, it can continue higher. But if it breaks that B period low by 2 ticks, then we're likely to just go sideways. No freaking way. Okay, no support on the halfback. That's a little bit bearish. Jesus Christ. I'm telling you, this is a sit on your hands morning if you're not a scalper. They will just chew you up. Now, this is a decent risk-reward entry for a long on one time framing. Risking this much for the potential to make all the way back up to the highs. But you got to have those brass balls. Balls of steel. Man. Yeah, that you're absolutely right. Kajax, that's what's happening. Obviously, this has got to be whatever they're talking about in the Senate right now. So what you have to understand is there's algorithms that literally listen to the words they say and take trades. There's cessation one time framing. Brilliant. Okay. So that increases the odds the market's going to go sideways for a while here. And it's such a massive range. This is a tough morning to trade. So this is where the POC comes into account, right? That green line right there. Likely the market will get above it, come back down, get below it, come back up, over and over again until it's ready to start heading in one direction or another. Let's take a look at the NQ, see what that guy's doing. NQ looks rotational as well. It hasn't officially started one time framing one direction or another. It's got to get above or below the initial balance. So technically, it's still just kind of rotational, looking for a direction. But breaking the A period low would be a little bearish as a break of initial balance. Increases the odds the market moves that direction. Tricky day. Tricky day. Trading donkey market. Do you think we're trending? You don't think we're rotational? So do you think we're trending up or trending down? What was the above comment? Yeah, I don't see you saying a trend here. Don't make me scroll, bro. Just tell me. Do you think it's trending up or trending down? Oh, there it is. Charles, market down. We are one time framing up. Okay, great. I'll take that. Oh, you're talking about using the initial balance as a single TPO. Fair enough. Yeah, I hear you, Donkey. It's fair. I'll take that. I'll take the opposite side of that. Why am I so comfortable? Well, because of the ticks. Look at that. Passing up and down through the zero line. No trend in the ticks. The other internals are not bullish. Values overlapping to lower. So I don't think we'll necessarily get your definition of cessation. I don't think we'll get below the A period. Not anytime soon. But I think we will just go up and down. And up and down. And up and down. Alpha Trader, C period is above the initial balance high. Does that mean anything? Yeah, it means that there's higher probability we go up. But the way we would have gotten a confirmation of that was if the C period stayed above the B, which it did not. So normally on rotational days, I'm looking to go long the market below value as long as we stay above the A period low, and looking to go short the market below value, looking to go short above the market, go short above the value, Jesus Christ, as long as we stay below the C period high. But I would be very nervous down here to go long below yesterday's low. So I'm happy to go long anywhere in here for a rotation back to the POC. But below yesterday's low, we may get further selling to the downside. So I'd be much more cautious there. So this is the area where I'd start looking for support. looking for the ticks to start pushing back up as a sign they're ready to rotate back up to the POC. Will we get it? Okay, no support yet. They're still pushing lower, and they're pulling I'm pulling the value area with it. But now we can look for resistance at yesterday's low as potential further downside continuation. Is anybody listening to this to this lecture, to this talk that's happening? What are they talking about? It is scaring the market. Oh man, yeah, the NQ looks bad. Bad. Broke the initial balance to the downside. Broke its support. Next support is going to be around yesterday's low. Methinks the fear and panic is winning. Jesus. All right, back to bearish. So looking for resistance around yesterday's low for continuation lower. So Donkey, is it fair to say we can mark this one? Does this count for me? We're kind of both wrong. Oh no, there's a lag. Just try refreshing, Black Cat. Refresh your screen. Jesus Christ, what did they just say? Yeah, we'll call that one a wash. Neither of us get a point. Nunes, yeah, brother. Today is a tricky day. I'd be willing to bet that in the chat right now, there's a lot of people that have gotten smoked this morning. Getting long, getting stopped, getting short, getting stopped. Because there have been several setups for potential upside trades, but I've just not felt confident enough myself to get into any. But you want to know one that's setting itself up now is resistance around yesterday's low. If we push back up into there and find resistance, that will be a good trade for continuation lower. Mike, you think he's still telling the fairy tale about inflation? And that's what's causing this? Could be. Obviously, with this super thin volume, it's a lot of day traders as well getting emotional. Short covering with a combination of FOMO selling. I'm sorry, long liquidation with a combination of FOMO selling. Ocean Blue, Charles, when are you going to trade overnight market? Last night was great. I don't know. I mean, you're right. The overnight market has been interesting the last few nights, but normally it's kind of boring. It's certainly not enough to keep me awake. Jesus freaking Christ. What did they say? What on earth are these people saying? Okay, I mean, we're running out of support here. The idea with a liquidation break, this is what's called a liquidation break, okay? So the idea is at some point it finds support and starts to trade back up. And then you look to see, does it immediately go all the way back to where it broke, which would be the A period low? Single points. So if it's just going to be a liquidation break, if it's all just fear and panic, it should rotate back up to the base of those single prints. But if it starts to rotate back up and it finds resistance, it is a sell-off that's looking for further downside continuation. So that's what we're watching for now. Any support the market can find to push back up and look for resistance. And we're just running out. There's no more support. All right, feels like resistance. Looks like the liquidation is not over. They're looking for another push lower. Man, look at the NQ. NQ is actually better positioned than the ES to find support here. The ES has got very little potential support now between where it currently is and that 50 daily moving average. Pretty much you got the low from 1116, and that's it. So lots and lots of single prints left behind from that C period. But there is no support in this market yet, so they're continuing to sell until they find it. It's a very risky place to enter a short at this point, but if you're in a short, you definitely want to stay in it. Oh boy, there she goes. There she blows. The last support. And the fear and panic continues. Yeah. All right, the buyers are making an attempt. If they can get the ticks back above the zero line, they can start to retrace some of these single prints left behind in the C period. But if not, they'll turn around and head right back down. Can they do it? Philip, who's going to stand in front of this freight train? Well, that's the thing about a liquidation break. The people who stand in front of the freight train, once it retraces, they're the the best positioned traders in the market. They're the strongest hands. So it's, I'm not saying the liquidation break is over. Let's see if they can get those ticks above the zero line. But yeah, whenever the people that do step in front of the freight train, once it's retraced, those were the smart buyers. But it doesn't look like that's happening just yet. Yeah, bouncing right off that zero line. So not enough buyers just yet. As we start to turn these candlesticks pink over here, we ask ourselves, are those buyers or sellers? Ticks below the zero line, there are more sellers than buyers, at least at the moment. All right, well, if they can't recover these ticks, it looks like there's more sellers piling in here, looking for another push to the downside. Let's see, the battle's still waging, but those buyers are going to get weaker and weaker if they don't break through here. Salmon, are you long? Like, do you put orders in at those levels? The pivots? All right, buyers, come on. Get yourself above that zero line. You can do it. Yeah, nicey breath. -9 to 1. That is intense. Nope, buyers couldn't make it happen. All right. There we go. All right, so ticks above the zero line. They're going to start trying to backfill these single prints. There is a lot of them that we left behind from that C period. So we look for potential resistance like we would anywhere else, right? This node, and then up here at this node around that halfback. As long as they keep pushing through one resistance after another, they're likely to head back to the base of the single prints. Okay, so we got through the first potential resistance. Now we're looking at the sort of 97, 98 area as the next potential resistance. They're keeping those ticks above the zero line, so there are more buyers at the moment. Stepping in. Oh, sorry, Scooball. I didn't see your comment there. I was out getting coffee. Yeah. So they're doing good. They're keeping those ticks above the zero line. More and more buyers are stepping in. So, Charles, why does it matter that the ticks are above the zero line? Who cares? Well, there's two different things at play here, right? One is the people who went short way down here, right, are panicking out of their shorts. They're covering those shorts. So that's pushing the market up. But that's not bullish, because what we need is new buyers joining the party. And that's what the ticks tell us, that there's new buyers stepping in here who want to continue to push the market higher. So you want to see both. Got through the first resistance, working our way through the second. The next stop will be the halfback at 46.09, 09.50. And there'll be some resistance there to work through as well. But as long as they keep the ticks above the zero line, they'll be able to do it. If they start to drift back below, well, then you got to get worried. They might be pulling back again. So now the question becomes, will previous resistance become support? Meaning when the ticks are starting to get down to that zero line, will they turn around and start pushing back up as we get into this node? If not, further downside. Continuation. They did it. All right, they're still going. Buyers are still trying to get back into those single prints. Bobby, if the feed is blurry, you can just click on the little gear tab in the bottom right corner of YouTube and just change the quality to either 1920 or 720, and it should get clear for you. Da-da-da-dum. Okay, so remember, a liquidation break that fails to get back to the breaking point where the single prints start is bearish for continuation lower. So this support, You know, this is the buyer's last chance in here to try to save this market. If not, we got a long way to go down. So this is important battle happening here. Ashik, when will someone buy? Well, they did a lot of buying to get back up to here. The question is, are they now taking profits? Are the buyers who stepped in down here going, oh, well, I guess we're not going to get anything else for it? Or are new buyers going to step in and say, no, we agree. We're going to go higher. That's what they're trying to decide right now. But the buyers definitely stepped in. Arnold, what happened to good old chart trading with support and resistance? That's what we're doing. We're just basing our support and resistance off of volumes of nodes of volume rather than candlesticks. Rob Farley, get back to the top of the single prints? Question mark. Are you asking, will we get back? Not if they can't get those ticks back above the zero line, which they're not doing. So it does not look like it. Fausto, or are shorts shorting the bounce and going to overcome the buyers? Yeah, I mean, that's the same, essentially the same way of looking at it. Although I would say it's a combination of the two, right? It's the buyers who stepped in down here taking profits as well as new sellers piling on. Remember, the people who bought this would have been strong hands buyers. So the only way we're getting back below there is if they're giving up on that trade and looking to get back in, maybe down on that 50 daily. Oh, you're asking, will it be resistance? Yeah. And there's resistance in the halfback as well. So if we get up here to the halfback, we might find resistance and trade lower there. If not, when we get back up to the base of the single prints, yes, there'll be resistance there. But that would lead to rotation more so than another sell-off, right? Because of what a liquidation break is. It's basically taking the inventory out of the hands of weak hands traders and putting it into the hands of strong hands traders. So a liquidation break is different than a normal like spike down. Nunez, if you're asking me, yeah, I have red weeks. I rarely ever have a red month. And usually if I have a red week, it was one bad day of trading where I gave back my profits from the other days. But don't worry about my success or failure, brother. It has nothing to do with yours. You're only in competition with yourself. Mike, hard to imagine how people traded in days when they didn't have charts. Man, I think it's awesome how they used to do it. Like back when they used to trade in the pits, they would trade off of the noise level, right? Like as it would get louder and more people were screaming that yeah, I want to buy, I want to sell it. They would recognize that the same way we recognize volume. And they would look up at the tape and they would see where is the price at the moment where it gets the loudest. And then they would know, okay, that's a strong level of support or resistance. It's like it was all the same stuff. It was just the information was shared with them differently, which was the vibe in the room. Screwball, look how often important levels get broken by a few ticks. Yeah, but that's to be expected. Anytime you have a support or resistance, you got to give it a few ticks one way or the other. It may not quite make it to by a couple of ticks, or it might go past by a couple of ticks, but that's just totally normal. It's like you say, it stops getting taken out and stuff like that. You always got to give your areas of support or resistance some breathing room. That's why I've stopped looking for exact levels. How often do I say, the market will find support at exactly 45.87? I just don't think about markets like that anymore, right? I think about them in terms of areas. And I go, if it gets support around here, I'll look to buy. If it gets resistance around here, I'll look to sell. So that my mind is open to wherever it's finding that resistance, trusting it and getting in, as opposed to being too focused on one specific level and will it find support exactly at that level. Imagine market profile screaming louder and louder as these levels turn red and pink. You actually can. So there's this company. I guess I'll just do a free plug real quick. Financial Juice. That's it. What is it called? Tick Strike. That's what it's called. Yeah. So there's this company, Financial Juice. They're like a news. They like give you like updates on the news in real time throughout the trading day. It's brilliant. I absolutely love it. I don't trade off of news, so I don't really use it unless there's something funky happening in the market and I'm trying to figure out why is it happening. But they give you all the best headlines and stuff like that. Anyway, they invented this thing called Tick Strike, okay, which is like you can use it through the web on here, or there's like software you can download on your computer, and it literally makes noise as volume floods into the market. So it's like as more and more buyers step in, it gets louder and louder, and more sellers, it gets louder and louder. So it's literally designed to mimic those, trading rooms, those trading on the floor back in the day. And I tried to use it and I can't because I'm live streaming. And so it's distracting for me. But you might try it and see what you think. Man, oh man. Well, the tempo has gotten really slow. but they've pulled the POC lower, which is bearish. They've pulled the value area lower, which is very bearish. They are trending lower. And we cannot get those ticks back above the zero line. So I think this market's got further down to go. There is a chance it could find support in here and go sideways because the tempo is slowed so much. But I think they gotta have more price discovery to the downside. Open to both possibilities. Donkey, are you having a seizure? Are you okay, bro? I have no idea what you just typed. Is there a way to know where the value area was by the 30 minutes? I'm sure, like with Window Trader, I'm sure there is a way to calculate that. But that doesn't really, I think that would be like looking too hard, right? You can certainly figure out how much volume is traded at each level, and that might be valuable. I keep it simple by just looking at the day and this 30-minute period, but you can put volume profile on each one of the TPOs if you felt so inclined. So you could put these on here so that they're right next to the letters, and then you could see exactly where the volume was trading throughout the day. But to me, that's just a bit too much information. Probably going to be distracting. Trading Donkey buy Fear Dog. Yeah, I mean, like I said, it could go sideways from here. The tempo is really slowed down. So if you want to buy it, buy it. I just feel like getting, resistance at that 20 daily moving average increases the odds we're heading down to the 50. And with value lower, increases the odds even more. And that doesn't mean we have to go there today, but just that that's the direction we're heading. Need the 100 moving average. That would be a big pullback. That would probably be a straight up correction. Cotton Dog. I mean, I can tell you what the advanced first decliner level is. It's at 2185. Okay, so that's a poor low that we just created in the market. The market will often push away from a poor low, but then come back at some point in the day to repair it. And of course, if it instantly repairs it, that is more bearish. All right, textbook poor low. Pushed away, found resistance, came back and repaired. So the trend to the downside remains intact. We continue to pull the value area lower. That is bearish. So once again, guys, just stepping out for a second to get some perspective. The next support on the daily, which it does appear we have a downtrend in the daily. The next support is that support resistance starting back here from September, which is at 45.39.50, and then just below it is where that 50 moving average is, which is currently at about 45.30. And there should definitely be some swing traders stepping in around there. Donkey, you're out. We're not going to hear from you until we get down to the 100. I'd be willing to take a bet that's not the case. I'd be willing to bet you're still sitting there and you're still looking for trades. Cotton Dog, Nicey Breath, -15. Any historical reference for that? Damn, that is very low. I don't normally pay attention to those specific levels, those little whatever they're called, breath bubbles. But I know it's happened before, but it only happens on days like this. Step back and look at that daily. Give yourself some context. These days do happen, right? But also step back and give yourself some context. Broke the 20, went to the 50, recovered. Resistance at 20, back to the 50, recovered. Support at 20, broke 20, 50, spent 1 day below it, recovered. Broke 20, visited 50, recovered. Broke 20, visited 50, recovered. Then this major pullback, which was like a correction in the market that we just got, still never got down to the 100, I don't think. Oh, we did. Man, tested the 100. Broke below it. Or kind of grinded through it for about 5 days. Came back up, found support, continued higher. So put your fear in context. There is support at these moving averages. We just got to get down there to find it. Market loves to buy on discount, right? All the people that were too scared to buy in here the last time because of all the excess that pushed us up there, myself included, was like, this can't keep going. I was sure we were going to get a double top and a bit of a pullback before we would get any continuation. So there's a lot of participants waiting to do business down here in this area. They see that as their Black Friday sale. That sweet, sweet deal they can't pass up on. So let's see what happens when we get down there. Do I really need a new mattress? No, but it's Labor Day weekend and it's on sale. I gotta buy it. Humans be humans. Donkey, how much the bet? By answering me, I was right in the bet. That you weren't out, that you were still here and hanging out. So you've already lost the bet by responding. Did that last night with a laptop? I did as well. I bought a couple pairs of sweatpants last night just because of Cyber Monday. And then I was like, I already have a lot of sweatpants. Why did I do that? Oh, well. See, now, Salmon River, if it's something you needed, that's different. You're just taking advantage of a good deal. But it's about buying stuff you don't actually need. Slade in the house. Been a minute, brother. Welcome back. It's when you buy something you don't need because it's on sale. That's when you're in trouble. So I certainly wouldn't be looking to add to a short here, just because we're starting to get those ticks back above the zero line. We print the F period in 2 minutes. So we'll know the trend is over if the F period gets above the E period, but it is a long way to get up there. So I would be looking to go short, if it fails to get up and break that trend. But I would certainly give it a chance to push higher here if they can keep buying, which they are. Cotton Dog, how do you interpret slower tempo? More likely to balance? Kind of, yeah. That the slower tempo is a sign that the panic selling is done, right? And so now it's just um, the larger players repositioning themselves slowly but surely, moving their money around. I don't know where they're moving their money into because I'm just watching the ES, but I have a feeling that as this market slowly grinds lower, there are other markets grinding higher. Maybe it's, um, bonds, maybe it's gold, maybe it's whatever, right? Like, so they're just slowly moving their money out of the equity market and into whatever they want to protect it for the time being. Um, so yeah, I do think the slowing of the tempo is less bearish than the fear and panic selling, but I do think it's going to continue until we get to that 50 daily moving average. It seems like they got to put the market on sale to bring in new buyers. Another thing to keep in mind is something as big as that news we got this morning takes time to work its way through the financial system. There's money managers all over the world that are asleep right now. So it's going to take them some time to wake up, find out the news, start repositioning their portfolios as well, so on and so forth. Cotton dog. I wonder if we could have a V-shaped kind of day today. Maybe a small little V, maybe like a check mark kind of V. But there's no way we're heading back up to the highs today. Value, every tick lower that we go, we're pulling value lower with it. So that is very bearish to see. I would say if we do get any kind of V shape, I mean, halfback would probably be about as far up as we get. So that's currently at about 63. Sorry, 4603. I think that's about as good as we could get on a V shape. But like I said, I don't feel that just yet. The market is still trending lower. So first let's get cessation and then we'll see what happens. Was just wishful thinking. Fair enough. But again, to have that happen, the whole market would have to change their mind. You know what I mean? Everybody who's been selling for the last 2 hours would have to suddenly say to themselves, I'm ready to buy now. And we'd need some good news to make that happen. Cotton Dog making his early guess for the M period close, 45.50. Ad still falling. The S&P one looks pretty flat. Yeah, that one's the full market is still trending down. Anyone out there got any questions? Any newbies dying to know something? The chat seems to be mostly Brigade members. Nobody new sticking around? William, dead cat bounce. Oh, you think that's what's happening right now? Yeah, I mean, the market doesn't go straight down. DSS cryptocurrent. That's me. You got any questions? Feel free to ask. Cotton Dog do any shopping in Manhattan? No, I do all my shopping online. Joe Park, you're at a hotel. Enjoy your vacation, man. If you're at a hotel. SS Cryptocurrent, listening at work, bought the S&P. Yeah, I generally won't buy against a trend. This is clearly a downtrend. So like I said a few minutes ago in the E period, I'd be reluctant to go short here either just because the ticks are starting to recover. But until they get 1 30-minute period, the high of it above the previous, they're likely to just turn around and keep heading down. So I'll just sit by and wait. Inflation is no longer transitory. Yeah, I'm just now catching up on it. I'm watching the thing from this morning, and like Powell is holding no punches. He's being like crystal clear. He's like, yep, inflation is bad. Like he's not even trying to word salad it. He's just straight up explaining. I love the part where he goes, well, we all have a different definition of the word transitory. Sure we do. Danielle, 30-second chart is long. Yeah, I mean, if you got into a trade in the last, 10 minutes, it was a good trade long. Joe Park, I'm in the very center of the COVID pandemic in India for a business trip. Oh, so you're trying to just keep it safe, stay in the hotel? Fair enough. Yeah, we in America forget that the rest of the world still doesn't have the kind of vaccination rates we do. So it's still spreading like mad. Yeah, I agree with that. Cryptocurrent. Just mentioned that a bit earlier. So you're talking about this one here, right? The peak before the last pullback. It's going to perfectly line up with that 50 daily as well. So there should be some buying in there. Probably going to have to wait for tomorrow, though, with this tempo slowing down like this. Brett, yeah, let me pull that up. Back on the wick tests. Also worth noting, if you're looking for a risk reward short here, we are going to print the G period here in about 3 minutes. And we can use the F period high as a potential area for a donkey trade. So we'll see what happens with that. Today one might wonder. Yeah, I mean, I see it. But here's my question. Were you targeting that when we had this pullback? Or actually, no, we talked about this. So it's not, you don't target it, you just use it as a piece of information once the market's doing something else. Yeah, I'm not going to fight with you on it. If it works for you, keep doing it. So for those of you that don't know what the donkey trade is, as we've been talking about before, the cessation of the trend, the end of the downtrend, is when one of the TPOs, which is like a 30-minute candlestick, gets 2 ticks above the previous one. So in this case right here at 45.8250, if when we print the G period in 1 minute, okay, it comes up here and it gets 2 ticks above that F period, we know the trend is over and the market's likely to just go sideways for a while. Okay. So if you were looking to get short, thinking that the trend was going to continue, knowing that your stop is going to be right there, you've got very good risk reward right now to get into that trade. And so what Donkey, pulled the POC lower, that is bearish. And what Donkey likes to look for is getting right up in there where you're just a few ticks away. That way you're only risking a single point for the potential to make much, much more. So the one time framing is certainly in play at this moment. If they cannot get that G period above that F, we are likely to continue lower. And pulling that POC down is bearish as well. Yeah, somebody should do a write-up for Urban Dictionary on the donkey trade. Donkey trade trademark or donkeytrade.exe. Jonathan, you know me? Brian, talking about that wick trade, works well in the commodities on the 4-hour. That's interesting. Yeah, you're right, Jonathan, with a C. Great observation, Phoenix. Yeah, you got the overnight low there, too. So that could act as resistance right where you want to stay, right where you want to find resistance to keep the trend going. Very, very interesting. So that's the donkey trade, entering with only 2 points of risk. Oh, there you go. Cessation of one time framing. All right. So what does cessation mean? It means that the downtrend has come to an end. The sellers got exhaustion, and the market is ready to go sideways for a while. As I mentioned before, I don't personally think we'll get above the halfback. So I think any resistance above the POC and below that halfback should be sellable back to the POC. If we were able to get above it, though, I would be much more cautious going short, as something has clearly changed in the market. And support below the POC should be buyable for rotation back up. But again, I would really need confidence to do it because the value area is so low. I don't want to buy below value unless there's at least 3 ticks or more. 1 tick is like tricky. Tricky. But anyway, look for the market to go up and down. Jitten, Charles, what's the new balance area? There is none, my friend. We have broken out of balance. So let's just open up the daily real quick. The good old daily. Oh man, when I open up, I clicked on the continuous ES contract and I recognized that channel I drew a long time ago is also further confluence with that 50 daily if we get down there. Okay. So yeah, essentially what we had was a balancing area in here. We tried to get back up into it yesterday and failed. So now we are in the process of excess to the downside. There is no new balance area just yet. But my guess is we'll start to find some support in here. Probably manana. Until then, the market is just kind of moving sideways. So if you're asking about balance here today, it's just too hard to call. As always, I'd be looking to go long below the POC, short above, but where exactly to do it, I honestly can't tell you. We don't have clear support resistance levels here just yet. Should come down and repair this weak G period low at some point, though. points. I'm back. Neo Kim, shorting or longing? Well, I don't know when you asked that, but like I said, when the market goes rotational, I like to buy below the POC and sell above. But today, with this stronger downtrend happening in the market, I'd have to be very, very certain of support before I'd buy below. So I would definitely need to see the ticks above the zero line before I'd be ready to push that buy button. And I would also sell below the POC if we broke out to the downside. So if we got below that F period low, came back up and found some resistance, I would sell that for continuation lower. But as a day trade, I wouldn't sell below the POC above that F period high. I wouldn't sell in here. I would either go long or sit on my hands. Although, to be honest, I would happily sell this if I was going to hold it for the next day or two, because I do think we need to get to that 50 daily. But not for a day trade. Kajax, with the debt ceiling conversation coming up, Omicron will inevitably be announced in the U.S., meaning that we start to find cases of it here. What's stopping me from buying puts for the week? What's stopping you from buying puts for the week? Well, I have nothing. You know, if you're bearish, buy puts. I'm willing to bet they're expensive right now, though. Salmon River, lucky that Apple is having a good day. Apple's the only thing. Apple in the 10-year are the only things having a good day today. And Cotton Dog, maybe that could be it. That purchase of the new iPad was what they needed. Harjit short on upticks to 45.83. Short on upticks. I'm not sure I know what that means. Franz, any news today? Yeah, there was some news today. There was definitely some news today. Harjit, I told you guys that it was a short if it can't hold over 46.35. Did anyone take it? You mean on like a previous day or earlier this morning? Cotton Dog, inflation is no longer transitory. Yeah, that was the main news. Inflation is real. Phoenix, it's also month end. Good point. All right. So as the market continues to grind around, my analysis is the same. To get further downside continuation, we got to get below that F period low and then come back up and find resistance to head down to that 50. Otherwise, there's just as high a probability that it turns around and goes back up to the POC. But I wouldn't jump into that trade unless the ticks got above the zero line. Because the value area being butting right up against the low of the day is kind of bearish. Ooh, Salmon River. Getting spicy. Now, I wouldn't call this an H pattern. I'd call this a waterfall pattern. That's what we're looking at here, a waterfall. It's a classic. J Trader, how's my car selling going? Not well at all. I've had nothing but scammers reaching out. I had one real human actually reach out to me and lowball the shit out of me. But other than that, it's just been all scammers, one after another. They want your name, your address, and your telephone number. Why that's so valuable, I have no idea, but they want it so bad. So I'm just dropping the price a little bit every week and wait until it finally gets a buyer. right, well, they got the ticks back above the 0 line, so they should be able to get back up to the POC. But of course, once they get there, the two-way auction starts again. I'll give you one guess as to which way it'll head. Selling cars just like the ES. It really is. Just got to put it on enough of a discount that someone can't refuse it. They got to have it. It's too good of a deal. I mean, right now I have it marked $2,000 under the blue book. So someone should get enticed here pretty soon. But it's just frustrating how I get emails every day and they're all just a scam. All right, well, we cheated and pulled the POC down, but now we're pushing it right back up to where it was. So that is the rotation back to the POC. And then remember, once we get back to that POC on a rotational day, that's the fairest price to do business. So the two-way auction must start again. They can push it up or they're going to push it up. They can push it up or they can push it down. But once it gets far away from that POC, it's likely to come back to it. Starting to see a little bit of a trend up in the ticks here. If they can keep that going, they can head up to that halfback. But I think there'll be some, I don't know. It's pretty far away. So there'll be some resistance around the overnight low in this area. And then around this node right here, call it 45.90. But if they can get back above that, they can probably get up to the halfback. But I don't think they're going any higher than that before they turn around and come right back down to the POC. You know me. Harjit, I think Apple is up because they think everyone will be working from home now and they will be selling more products. I don't know. I mean, I can't tell you exactly why Apple's like the only freaking stock that's getting bought today. Maybe somebody knows something. But my guess is it's just a very safe investment, But honestly, it is funny that it's the only thing going up. Yeah, I feel the same, Salmon River. If I had to attribute everything I talk about to either Peter or Jim Dalton, that's all I would ever be saying. Because that's where it all comes from. Uh, J Trader Gold had a nice dip. See, I don't like the way gold looks. I was just looking at that a few minutes ago. It missed its chance at support. So this trend line that it broke to the upside that gave us that massive push should have acted as support on the way back down. And they're breaking through it again. So to me, that's bearish. Me no like the way that looks. Maybe heading down to like 170 or sorry, 1754. Why is volume so low on gold? I don't know. I guess it's not the safe haven it used to be. I mean, it might be over the next few days. It might get an inflow. But they didn't start today. Another potential resistance to the upside if we get up there will be the 20 moving averages on the 15-minute candles for both indices. They'll pull themselves lower as price works its way up to it. Baby, come back. Come back to the POC. I was long, but I just can't profit without you. Well done, Cotton Dog. Well done. Samuel, welcome. So the POC stands for the point of control. You can see it on the chart. It's this little green line of letters right here. And it's just basically the way to think about it. When the market goes rotational, which it did for the second time today here in the G period, once that happens, you think of the point of control as like the fairest price to do business. So essentially, anyone that's buying above it is overpaying for the market, and anyone that's selling below it is selling for less than the market is worth. And so eventually the market will realize that they're wrong, and then it comes right back to that fairest price to do business. Today is not a good day to teach rotation or to teach trades to the POC. There's just too much going on here. But normally on a simple average rotational day, it's a really excellent play to just look for the market to keep coming back to that level. Cryptocurrent. You'll be the only one. You'll be the only one. NQ breakout? No, it's just rotation. We can pop over and take a look. Yeah, I think both markets are just creating a nice B shape. So by the end of the day, we'll have spent a bunch of time in here. Same as the ES, I would say the top side target will probably be around that halfback. If the market is able to get up to there, it'll likely find resistance and come back down at that point, if not earlier. Maybe this 20 moving average when price meets that. But I just don't think this is a V shape. I don't think we're going to recover. As a matter of fact, looking at the cumulative volume, we're pushing into some resistance right now. Next bit up here at like 214. Mediterra. Sorry, bro. I should give a warning before I break out in song. I really should. Sorry, Samuel. Took me a minute. I was busy with something else. Can you show me an example of a previous POC and how you would trade it? Yeah. Whoops, man. It's that time of day the computer's getting tired. It's like, Charles, you got too many things open right now. Let me close some stuff. Okay. Okay, so this right here is what a normal rotational day would look like. This is a day where it just rotated all day. And you can use this every day when the market goes rotational, which it always does. At some point, it goes rotational throughout the day, but it's just the easiest to teach on a day like today. So the POC is right here, and you can see if you sold above value, right? All these times the market came above that POC. If you sold in that area, and then took profits back at the POC, every single trade was profitable, right? Same thing on the downside. If you bought below value and went long, every single trade came back to the POC. So you would have had a 100% success rate on this particular day. Now, this is a perfect textbook day. They don't always look like that. Here's another rotational day here. So this is one where the market ended up breaking out. So it's a good example of an alternative. So the market got cessational and time framing in the D period. And from that point on, it just kept rotating up and down through that POC. And then in the K period, it pushed higher and it ended up breaking out in the M. It was actually a failed breakout because it pulled back in. So it never works 100% of the time unless it's that perfect textbook day. But any of these trades above the POC or below would have got you back to it. Okay. Here's a day like today, right? This is a B-shaped profile, which is what I think the market is forming here today. So let's expand that out and look at the POC. So the market traded lower all morning. We actually got the cessation in the C period. But you could see any selling above the POC, it came back down over and over again. Any buying below, it came back up again, over and over again. There's another textbook rotational day. Okay, got cessation in the H period. So this is where we knew the market was rotational. Rotated above the POC, back below, above, below, above, below. That's why I say today is not a great day for it because of the massive range. The amount of risk you have to take on this rotational strategy is pretty major. So it'd be better to be taking, shorter trades, more like scalps. But I do believe, just like on those other days, I do believe that the market will find resistance. Okay, we might be pushing into it right now, actually. This might be the resistance, or it might be the half back up here, or it might be this 20 moving average here. But at some point, it'll get resistance and then rotate back down to that POC. And then it'll try to go lower, and it'll find support, and it'll rotate back up. So the general idea is just a change in the market sentiment. That earlier in the day, the market was very, very bullish. And at this point in the G period, the market relaxed and it decided, you know what? We're not sure anymore. So half the participants think it's going to go up. Half the participants think it's going to go down. And they're just doing what Jim Dalton calls picking each other's pockets. That's what's happening here. Right now, in this moment, the bulls are winning and they're picking the bears' pockets. And pretty soon, they'll run out of steam and then the bears will start winning, picking the bulls' pockets and vice versa. That is rotation. Harjit, this is not a recovery. Have you seen the advanced decline? Yeah, so I think the advancers versus decliners is pegged at a lower price. So when this happens, when it just goes on a flat line down here, that is often a sell the rips, buy the dips scenario. So go short on a push higher, take profits on a pullback. Cotton Dog, with some extreme market conditions this afternoon, what indicators are useful at this point? Just the ticks? It's not that all the other indicators aren't still useful. They're just harder to read, you know? And it's purely because of the volatility. The market is still doing what it always does. It's just doing it in a much bigger way with a much bigger range. So it's much harder to manage your psychology. Right? Because if you're wrong, the market could go way against you. And if you're right, it's hard to stay in your trade because you're making so much profits. You're just eager to take those profits quick. So the market behavior is the same when we have a large volatile range like this. It's just much harder to trade because the emotions are heightened. Okay, we got that resistance a little early on that 20. But the next target becomes the POC down here. Unless the buyers can save it and push back into there. Nunez, what were your biggest losers caused by? You always ask these like interesting questions. Um, my biggest losers were always caused by my emotions. I get into a trade and it goes against me, and I convince myself that if I stay in it, it'll come back. And then it keeps going against me and keeps going against me. And then I convince myself it's too late to accept the loss. I have to stay in, or worse, add to it. That's something I used to do, add to a loser, thinking, ooh, if I average down my entry, I'll make my money back. So yeah, it's always emotion. That's what causes the losses. Revenge trading, that's the worst for me. Have a couple of losing trades, and then I'm like convinced I can win the money back, and I start taking riskier and riskier setups. 'The thing to look for when you got a nice uptrend in the ticks like this and the market is pushing higher is for one big red tick that breaks the uptrend to the downside. That's often your signal the market's going to turn around and head back down. It can fool you, though. It's not a perfect signal because sometimes you'll get a big red tick and then it'll wick right back up a second later, and then it doesn't count. But that is one thing to look for when the ticks are trending like this. Give me that big red tick. One hundred people watching, 96 likes. Can we break 100 likes? Bullish on the likes. Can we get just 4 brave souls to push that thumbs up? Get some triple digits up in this B. There it is. Thank you guys. And I lost. I lost like 5 people. Whoops. Sorry. Sorry. I shouldn't have asked. Thank you so much. Appreciate you. Yeah, that's a great point, S&P Addict. Cutting and reversing constantly, that's another one that'll just get you chewed up. Like you feel like you're just taking on little losses, but then at the end of the day, you realize your account took a big hit from it. So if you get into trades and they go against you, better to just step aside, clear your mind and reassess rather than try to go the opposite very quickly. That's a great one. Jax, did you move the POC? Well, I don't move the POC. The market does. But nope, it's still sitting at the exact same level right there. See that green line? That's the POC. And if you're wondering, but Charles, you said it was going to rotate back down to the POC. Why hasn't that happened yet? We just haven't quite gotten the resistance yet. Waiting on that big red tick. There'll be some algos selling at the 20 moving average here. That might be enough to do it. Careful with the bragging, S&P addict. Remember, there's other people here that are on the other side of that trade. And they're feeling pain right now. Enjoy your wins. But just mention it briefly. Anton, the price level for the time period with the highest traded volume, that's the volume point of control. What I use is a time point of control. So it's just calculating based on where the market spent the most time. No, I'm not mad, S&P. It's just something to think about. Somebody else out there is probably feeling pain. But you should definitely celebrate the wins. You should mention it for sure. When you mention a win in the chat and other people say to you, congratulations, S&P, great trade, then your brain gets a little kick of, serotonin. And then that makes your brain want to keep doing that. It wants to keep winning because it likes the way that feels. So it's certainly not a bad thing to mention. Donkey. It actually hasn't moved, though. That's the point. It's still sitting down there. Salmon River, ES halfback, very near the VWAP. Ooh, there you go. More confluence, yeah. Donkey, you're long here? Well, don't worry about the POC. Worry about the ticks. Look for that trend to keep going higher. All right, so I'm keeping a close eye on these ticks as they push into the moving averages here. Can they keep this uptrend going, or will we get that big red tick? Who's got more power? The laggard buyers or the algorithms going short? Anton, specific time period is on volume profile indicator to notice or what? Can you phrase that question differently? I'm not sure what you're asking. Okay, so there's the first signal with that big red tick. It might still wick back up and the trend will continue, but this could mean the move to the upside has reached exhaustion. And we wouldn't be surprised if it did it right at that moving average. As we know, the computers sell there. All right, there's the wick back up. So it's not over yet. Correct, S&P addict. The entire market, the billions of dollars flowing in and out, it's all controlled by me. So it's worth mentioning. Jim Dalton always calls, things like this moving average a semi-permeable membrane, right? So the more times you poke at it, the weaker and weaker it gets. So if they keep grinding up into it, they will poke through at some point. But they haven't done it yet. If they do get through it, like I said, half back on both indices is the next resistance. So on the Q, that's at 16,264. And on the ES, 4603. All right, that's the poke through. They kept the uptrend in the ticks. They got through the 20 moving averages. Next stop is halfback. Oh, spoke too soon. It was a fake out. Fake out on the breakout. Brian, I don't think this market knows yet either as to whether it's going to go up or down. It certainly seems like it wants to go down. The buyers just made quite a battle to get it up there, and those moving averages held. But like I said, every time they poke up into them, they're going to get a little bit weaker. But if they can't get through, you know what I'm going to say. Baby, go back down to the POC. Those are big red ticks. They're not waking up yet. Wicked real good. Plus, we're going to print a new one in a minute. Anton, market capitalization of S&P US dollars is about 13 billion. Cool. Oh no, they pulled the POC higher. All right, if you're shorting it to the POC, go ahead and take profits there. Because they don't necessarily have to pull it back down. They might, but this could be the new area for two-sided trade right here. That is very disappointing for the shorts. Double distribution day, AB cup. AB cup. Oh, you mean like a cup and handle? Like the, I see what you mean. Yeah, it does look like we're definitely going to have a double distribution. Or maybe the same thing as yesterday. In the last 10 seconds of the day, it shoots up and fills it. That was such a shock to me yesterday. I did not see that coming. Okay. All right, perverts. I get it. Is Jonathan here? As Jonathan would say, not a Margot Robbie profile here. Anton, is there like a language difference here? The way you phrase things is very confusing to me. Value area of VPOC to consider 70% of volume. So VPOC stands for the volume point of control. That is whatever level the market has put in the most volume at. I would say for today, 1400 here. Yeah, so the VPOC right now would be at 4580. But the value area is something different. That is the blue shaded inbox. And the volume value area is the blue box around the volume profile here. So that is making up a massive amount of the day's range. Yeah, so the value area for time ends right here, but the value area for volume ends all the way up here. Both are at the low of the day for the lows. Oh, it's a Jamin. That's why. Makes sense. Anton, so yes, correct. It's where 70%. So there's two, I'm trying to explain there's two different ways to calculate it. You can calculate it based on volume, or you can calculate it based on the TPOs. If you're calculating it based on volume, then it is where 70% of the day's volume traded. But if you're calculating it based on the TPOs, it's using a combination of time and price. So it's essentially calculating where 70% of the trade took place, combining time and price. Well, for what it's worth here, guys, we're just grinding up against this 20 moving average, which, like I said, it's a semi-impermeable membrane. If we poke through, we'll get to the other side. And since we pulled the POC up, you could buy below the POC. So if we get through that 20 moving average, I'm pretty bullish we'll get up to that halfback. The market has spent enough time up here to get acceptance of these higher prices. So it doesn't necessarily need to pull back down to here where we were earlier on in the day. But the market remains rotational. Anton, yeah, volume is given as the definition for, like, it depends whose book you're reading, who's defining it for you. That's the one tricky thing about market profile is everybody kind of approaches it their own way. So if the person you learned from uses volume to measure it, then they will have taught you with volume. The person I learned from uses time, so I learned it with time. Neither is right, neither is wrong. It's just two different ways to look at the market. Correct. Yeah. VPOC looks at volume. You got it. And speaking of which, it looks like we just pulled that one higher too. We now got 1,300 contracts right here. I think that's the VPOC now. Nope, not quite yet. 1,400 is the VPOC. Man, now I've got that stupid Baby Come Back song stuck in my head. Damn you, Cotton Dog. Cotton Dog, Charles, market profile is trademarked by the CBOT and is time based. Yeah, but that doesn't matter. Everybody calls volume profile market profile. If you just type into YouTube like market profile education or whatever, you will literally find a plethora of different things of what it means. Nobody's looking up the trademarks. All right, well, if we get the K period down here to where the POC was earlier in the H and I period, we'll likely pull it back down again, which will be very frustrating. And you might be saying to yourself, well, Charles, I got short up here. And then when they pulled the POC higher, you said to take profits. What the fuck, man? Like, why'd you do that? Look, it went right back down to where the old POC was. That it just happened to work out this time. You know, this is a big range, but most of the time, if you're playing a statistical probability, it's better to take profits when the POC moves up, and then to look to enter long when you get below. But today's just a massive big range. I stand by my prediction that we're just creating a big B shape here. There it goes. Pulled it right back down. Ugh, that's annoying. My apologies to anybody who exited their shorts early. That would have been a sweet trade to the downside. Okay, well, now that we're back at the POC, guess what happens? We start the two-way auction once again. Peter, keeping the yeah, you know me alive. Phoenix, do you want to start a wager with me as well on VPOC versus POC or versus TPOC? Carmilla, two-way auction, question mark. Oh boy, don't get me started on my auction process speech. He'll drive the chat crazy. They've heard it a million times. All right, I'll do it. You talk me into it. So basically, the market is on all time frames, on all days, trading a two-way auction process, right? So you think about it like an art auction, which just goes one direction. You know, give me 1,000. Somebody raises a paddle. Give me 1,100. Somebody raises a paddle. Give me 1,200, and so on and so forth. The auction just goes one direction. The market works the same way, except it goes two directions, because the difference between a painting and the stock market is there's only one painting, whereas with the market, there's, you know, unlimited shares or unlimited futures contracts. So every time one sells, somebody just brings out another one. And so the auction goes both ways. It auctions up, and then when it runs out of people willing to pay that price, it turns around and auctions down, right? That's what it's been doing so far here since we got cessation, or the second bit of cessation, right? It auctioned down until we ran out of sellers. Then it auctioned back up until we ran out of buyers, and now it's auctioning back down. And it'll do that intraday like this. It'll do it, you know, if you're looking at 1 minute candles within a 10-minute period, it's auctioning. If you zoom out and you look at monthly candles, it's the same thing. So here's just like the daily candles. It auctions up until it runs out of buyers. Then it auctions down until it runs out of sellers. Then it auctions up until it runs out of buyers. And then it auctions down. So it's just a constant two-way auction process that's always happening. And there are signals that the market will give us of what is happening within that auction process. and we can use those signals to make decisions, right? So one of those things is like a balancing area. We had this balancing area that we were bouncing around in. Breaking out of balance often leads to, or always leads to, excess, right? So, we had a balancing area down here, and when we broke out of it, we got excess to the upside. Now we were breaking out of this one to the downside, and so on and so forth. When you're talking about this auction process intraday, there's a lot of great signals the market profile can give us to understanding where we are in that auction. And when the market is rotational like this, that POC tells us we are at the fairest price. So the buyers aren't right, the sellers aren't right. It's just they're both right. It's a fair price. But as the market starts to get up above it, the buyers are wrong and the sellers are right, so it'll come back down. And vice versa to the downside. As it pushes lower, the sellers are wrong and the buyers are right, so it'll come back up. It is the fairest price to do business. I apologize to those of you that have heard that speech 10,000 times. Cotton Dog, could end of month skew market behavior into close? Yeah, I mean, we might get a wild murder bot. But really, I would assume anybody who's looking to reposition themselves is probably going flat, right? It's hard to guess what's going to happen in a month right now, today. So we'll have to wait and see. So this is one way that the market profile is gives you a little bit of an advantage, looking at the market on a 3D, perspective. If you're looking at candlesticks, doesn't this look scary as hell? Like, oh no, we rejected off the moving average. This is the end of the world. It's going to keep going down. But when we look at it in the market profile software, we think, oh look, this is where we run out of sellers down in this area. So probably nothing to freak out about. We'll get down in here and run out of sellers and come back up. Perspective, they call that. Perspective. Jitten, I love this. Charles's top 3 speeches: 1, rotational trade; 2, auction process; 3, rotational trade. So true. Wink, wink. Message received, donkey. Gonna jump into a paper account and try a butterfly. No, an iron condor around 76, 0 day. See what I get for it. Brian, let's dig into this. Option gamma is around 86 and 63. So you'd want an iron condor around 0 to 50. So let's say I'm thinking that this market's just going to grind around here until the close. I don't think we're going to get any crazy spike. This is purely hypothetical, everyone. I think we're going to close around this price. What is the options strategy from here to the market close in the next, 50 minutes? Sold the 75 put and the 75 call, bought the 85 call and 65 put. Okay. Yeah, so just a butterfly. That makes sense. S&P attic, what kind of probability? That is tricky, right? Clearly the day is rotational. I have no problem assuming we're going to rotate into the M period, but this sucker could spike, and I don't know a probability that it won't. Um, it will be very interesting to see what happens, in those last 10 minutes. But we'll figure it out together. For those of you that are newer to the channel, we talk about something called the murder bot, which kicks in 10 minutes before the day closes. And it can often be very, very unpredictable and cause massive moves in the market. And sometimes it does nothing and it goes nowhere. So we just got to kind of wait and see. I often try to have closed out whatever trades I'm in by the time we get to that last 10 minutes, just because of the unpredictability of it. But I just keep stressing, when I look at this daily, I feel like it's got to get down to that 50. To me, that sucker is screaming that it needs one more little dip. And if it doesn't happen today, it'll likely happen tomorrow. And I feel like the powers that be behind the murder bot would know that. So let's wait and see. Peter, he's just messing with you. Nobody knows who the murder bot is. And the truth is, it's not any one like institution. It's a combination of everything. It clearly has to do with the rebalancing that takes place at the end of the day. So the larger institutions, they trade over the counter with each other during the day. And then they like put their orders into the books at the end of the day. So I don't think it's any one institution. But we joke that it's Goldman Sachs because somebody said it one time in the chat with like absolute certainty. Laser Eye, welcome. Late to the party, but we're happy to have you. Smash that like. Okay, tempo picking up a little bit here. So this is another one of those scenarios where you start to ask yourself, as the market works its way down to the lower end of a rotational range, is it going to break out to the downside, or is it just going to rotate back up to the POC? So the first thing we would look at is, what are the ticks doing? Are they trending lower, and are they below the zero line? They are below the zero line, but they're not really trending lower. They're almost trending higher. We got higher lows here. So to my mind, it's not quite ready to break out yet, unless those ticks start to break that uptrend in the lows right there. But I wouldn't be I wouldn't be willing to buy it until I saw the ticks get back above the zero line. Salmon River plus 700 to minus 700? You must be talking about those ticks. Yeah. Oh, look, we're back above the zero line. Boy, that was quick. All right, rotating back to the POC. All right, there's the M period. Lady M is upon us. For those of you that are new to the stream, we have a fun little game we play at the end of every day. It's so much fun, where we all just guess where the market is going to close today. So you don't have to be right. Just make a guess. No one's going to judge you. It's just fun to kind of see as a group where everybody's mind is at. So let me know in the chat, what price level do you think the market will close at in 30 minutes? I'm going to go with the POC at 45.77, although I am very aware of the probability of a spike down. It's a very bearish day, and I do think they're going to target that 50 daily, so a spike down is possible. But if we don't get that, I think right around the POC. So hit me in the chat and let me know what you think. Where's the market going to close? John Q, 45.75. So he's looking to kind of hang out in this area. Adventure DJ, 87. So he's looking for a little push higher. Donkey is seeing 69.69. Very, very specific target. I wonder how you came to that exact number. S&P Attic engulfing? I don't know what you mean by that. Like the M period will engulf the L period? Solipitis. Sorry, man. Every time I try to say your name, it's a tongue twister. 45.92. So big push higher. Salmon River. Spoiler alert. Prior Traders always says POC. No, I don't. Not always. Harjit, 45.50. So looking for a little pullback down lower. A little spike down. Brian also 45.50. Ocean Blue's not giving us a level, but he thinks it's going to go up and then come back down. Sanju, 45.75. Another person looking for a push higher, or just a little bit higher. Ray Miller, 45.80. Mo Gray, 45.49. There you go. Back to the POC. Back to the POC. This M period low as weak as can be. S&P Attic, 24.82. You must be 45.82. A little bit higher. S&P Attic, no, 25.82. Yeah, boy, that would be quite a sell-off in the M period. Jitten spiked to 45.50. So he's looking for that pullback. Nicholas, 45.85, looking for a little push higher. Donkey, they're still pricing in a move. Dump, dump, dump. Did we get a 1,000+ tick? For a fraction of a momento. That's probably just shorts covering, you know. They got super bearish in the L period. When they didn't get anything for it, they got squeezed out. FRM 45.70. So basically right about where we are now. Anyone else? Any predictions? Where is the market going to close? If you like this game, if you think it's fun, join the Brigade. $10 a month, and you can play this game with us every day. Anton 45.75. Another 45.50. Boy, a bunch of people have picked that number. Hasmeister also seeing some liquidity at 45.60. Brian. Yeah, I've been waiting to like pick a day to stay when the market's actually going to do something, and I got lucky today. I had no idea all this bearish news was going to come out, but it worked out in my favor. Muhammad 45.80, a little push higher. Ocean Blue, what usually happens at J period, most often a reversal? No, I don't think that had anything to do with the time of day. It was just, remember, it was just a normal rotational play. You know, the whole way up there, I was saying, the further and further we get from that fairest price to do business, the fewer and fewer people are willing to do business. So we were just looking for the market to find some resistance. The first resistance, the real resistance it got, was that 20 moving average on the 15-minute candles. And that's what was, you know, the Jenga. That was the final little straw that when you pulled it out, the whole thing fell down. So I don't think it has anything to do with the time of day. Camilla, 45.75.75. Are you trying to front run my POC guess? Is that what's happening here? So far, 500,000 more contracts than usual traded today. Pretty big volume day here. Massive volume, massive range. That's what fear and panic will do to you. Anton, 43.74, no, but 43.73. I mean, 45.73, yes. Just got to get that one extra point. Mina, still rotational with all this? I don't know if you're making it as a statement or a question, but if it's a question, yes, it is. Look where it just rotated back to. The POC, the fairest price to be. Man, they love to do business at that point in control. Trin, yeah, I use the TPOC. I just call it the POC. Yeah, Donkey, I just closed out that. Of course, I was trading the SPX on paper, not real money. And I had 10 contracts, but I made $1,100. Just closed it out like 2 minutes ago. And I was like, Jesus Christ, that's the easiest $1,000 ever. I really got to learn these options. Anton, I believe in time frames. Okay, man. You don't have to believe in them. They're a factual thing. Mina, okay, I'm buying here. Let's see. Well, first off, we're only like a point below the POC, so you're taking on a massive amount of risk for a very small potential reward. That's not a good rotational trade. And also, we're 4 minutes from the murder bot, and that means anything could happen. So I would not recommend going long here. Unless you got a really tight stop, and it's just a quick scalp back to the POC. Salmon River, gotta find the POC of that car. I'm doing it. I'm lowering the price a little bit every week. We'll find it. Let me just take a moment before the Murderbot kicks in here in a minute to just say thank you to everybody in the chat. 110 likes today. I really appreciate that. It's been a while since we got those triple figures, so it means a lot that you guys supported the channel. Know that your love has been received, and I send it back out to you. All right, let's wait for this Murderbot to kick in and destroy some faces. Mina, where's the next support at? Again, this is not a moment to look for support and resistance. That's the Murderbot. So when this Murderbot kicks in, it's too random. It can literally just go anywhere. So you don't want to be in a trade if you're not absolutely certain. This is not a time for beginners. All right, we got the spike down. We've begun a spike lower in the Murderbot. Man, that's actually a poor low. Oh, boy. Yeah, man, my computer's super laggy here. Okay, so remember, a poor low often gets a push away, but then it increases the odds of repair at some point later in the day, and an instant repair would be more bearish. There it is. Poor low repaired. Murderbot continuing the spike to the downside. Oh, I forgot to switch the thing. Thank you, Salmon River. It's a great point, man. As they say, when that advancers versus decliners is pegged at a lower price, you can sell every rip. So that would have been sellable. This one would have been sellable. But I don't ever take trades based on that alone, but it is a great signal. Murderbot continuing the spike lower. All right, well, we had a bunch of people in the chat calling 45.50. I would say the next major support is actually 45.40. So let's see where this sucker goes. Mina, you think 45.30 and then we bounce? That'd be a pretty big push. But never say never. All right, second round of Murderbots kicking in here. Brian, that might be all boring. This is not boring. Bro, we had a major sell-off day, created a B shape, and then we got a spike down at the end of the day. So this is setting us up for further downside continuation moving forward. Spike rules will be in play tomorrow, which will give us an insight as to where the market might move. Exciting times, my friend, exciting. That's the murder bot we know and love. Just getting everyone on the wrong side of the trade and then punching them right in the face. This is the way. All right, guys. Well, with the market closing here, we got ourselves a spike. Whoa, man, that volume was way too loud. We got ourselves a spike down, so that spike rules will be in play come tomorrow morning. Like I said, I still believe fundamentally in my heart of hearts that this market needs to go down and test that 50 daily. So my prediction is that's where we're going tomorrow. But if the overnight market pushes us back up, anything could happen, right? So I look forward to seeing you all here on the YouTube tomorrow morning. Carl's calling for that gap up. A gap up would be crazy because we'd have to get above this morning's high. But we'll have to wait and see. If you're not a member of the Brigade, it's never too late to join. It's the end of the month, so it's a great time to join so that you remember if you want to cancel at the end of next month. If you do hate it, you can do that. Otherwise, we look forward to seeing you all here tomorrow morning. Thank you so much for the likes and the fun conversation, and we will see you later, Gators.